presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come on, Parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great. Adam, yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling problem with us.
Yeah, sure. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for kicking your Monday off right here at TFNN, folks. And we have markets picking up right where we left off. Higher prices across the board, and we are basically at session highs. We have the NASDAQ 100 leading the way up 1.7% on a week that doesn't get much bigger for earnings. We have Meta and Google tomorrow, Tuesday, Microsoft on Wednesday, Apple and Amazon on Thursday, and in the middle of that, we got a Federal Reserve meeting where they're expected to cut rates by 25 basis points, and then we got a China truce going on over the weekend, and we have Qualcomm. They're going to be making chips for the Saudis, but they're making AI chips, and the market likes that. A little bit of a pullback, to put it lightly, from the highs, still up by 12.2%. Qualcomm trades as high as 205.95, and as we look at it, taking aim at NVIDIA with AI chips. We'll jump back to that in a moment, but that's some context, and boy, we got equities higher, folks. We jump over, and let's take a look at the volume. It's a one-way trip, man. Look at this ride from last night to where we were this morning. NASDAQ 100 is up 133 points just from where we were on the open, and we're up now 1.7%. We take a look at the daily. We're going to get some decent volume, but you want to see it up a little bit. We have the pullback from last Wednesday, October 22nd. You drift higher to higher price on lower volume on Friday. That volume on Friday, 460,000 in the NASDAQ. We're at 342 right now, so we'll see where we come in, but you don't want to just drift higher on less volume. S&P's pretty similar action. We look at the volume. You sell off on Tuesday, Wednesday, and Thursday. You climb higher on lighter volume. Today, 844,000 contracts so far. We're coming into 1.2. It's going to have to be a big final 51 minutes of the day to eclipse what we had going on in terms of just that light volume day we got. So volume lightening up. We jump over to the ETFs. Similar action. Look at the drop off on the SPY. Okay, Friday, 74.3 million. Today, 39 million on the SPY. You jump over to the Qs. Listen, this is not making the case that you short the heck out of this market, but it is something to watch as we drift higher and the volume's lightening up a bit. And boy, you talk about a story of expectations, folks. It feels like everything's lining up, right? You jump over to NVIDIA. How about NVIDIA? Up 2.3%, up $4.30 higher across the board. We jump over to yields. The 10-year. Put it on a weekly. 4%. That's where we're sitting right now. The 10-year, negative by one tick. You look at the action intraday. We open with a little lower price and higher yield, and we're right back to where we were on Friday. And what's interesting is you got that CPI print on Friday. Comes in at about 3% for inflation. The market was actually looking for 3.1%. Important to keep the context of where we are right now, right? We get an inflation print the Friday before the Fed meeting. That inflation print shows that we have inflation running at 3%, and the market is certain that we're going to cut rates. Inflation's a problem. So think about that in the context of assets. You've seen the gold run, jump over to gold, but it is a problem, folks, when we are now abandoning the run to 2%. And listen, they think that over time, right, it'll be a slow progression. That last mile between 2 and 3%, I don't know. We're cutting right now, and we might have some weakness in the economy, and that's going to bring down inflation as well. But boy, we are cutting rates at a time when the market just goes straight up, and we have inflation at 3%. S&P is approaching 7,000. The NASDAQ's approaching 26,000. And the Dow, you better have a special hat ready when that Dow hits 50,000. And we'll see if we hit it, but you're only about 5% the way. What are we? 2,370 points which, is literally like less than 5% away from 50,000 Dow. Some stratospheric numbers. Gold continues to trade lower off $121, or almost 3% to the downside. We take a look at the daily on gold. Now, gold, there's a ramp up, okay? You look at where we were. You accelerate last week, a slight reprieve for a few days, and we're accelerating on volume again. The volume today, it's going to be a bigger number than what we did on Thursday and Friday. Not sure you're going to break below this with volume. The lows of Wednesday, look at right where we are, 4,021. So we're $5 below there. Boy, you ever break that on volume? It would take a lot, though. Right now, we're at about 310,000 contracts. 457 is the number from that acceleration. And the big day last Tuesday, 524. Gold under pressure. You take a look at the weekly on gold. Didn't quite get the same level of volume that you saw on October 13th. But that was actually the high, 43.98. You sell off, and on a daily basis, okay, not how you want to make a high. Look at the volume day that we made the high. That run to 43.98, one of the lower volume days. Squeezed in between two selling days. That was your one shot before we got a little bit of a consolidation in gold. You jump over to silver right now. So gold's off 3%, silver off 3.5%. You got volume at the highs on silver, man. 53.76, that's your weekly. You take a look at the daily, though. Look at all those days that we're selling. Let's back this out. It's a lot of volume on those red days, right? Trading lower, trading higher on lighter volume. Trading lower, higher on lighter volume, and then you rip lower on volume. And today we're getting volume again, and you're breaking some areas on silver. So keep your eye on it, man. All right. Oracle shares down by 0.7%. Let's jump around to some of the Magnificent Seven. So on tomorrow, Meta, they'll be out with their numbers. Meta up by 1.7% right now. You jump over to Google shares. How about Google, man? Quite a run. Up another 3.2%, up $8 and change to $270 for the high today. We're trading at $268. Meta and Google Tuesday. Microsoft, this thing's been on a tear as well, up by 1.8%. Microsoft on Wednesday, and then we get Amazon and Apple on Thursday. And just as I was coming on the air, you got Amazon out there. I mean, this one is saying, literally just before 3 o'clock. So they're going to be laying off 30,000 corporate jobs. Now, it's always interesting, folks, in terms of the game theory. Why do they release this early? They could have released this on their earnings call. If it's material, it's supposed to get done. Okay, so if it's material, it's happening. They're supposed to release it. But it could have been done. So they're making the conscious decision to not put that on the earnings call. It is a small figure of the 1.55 million total employees, okay? But nearly 10% of the company's corporate employees. It's a 10% job cut in the company when you're talking corporate. Largest since 2022. So they're trimming the workforce. Amazon, you're going to be coming out with their numbers. Amazon up by 1.1%. Apple shares, they'll be out with their numbers on Thursday as well, up by 1.5%. And Qualcomm giving back some of those gains, but they're going to be making AI chips. They got a deal with the Saudis to start pumping those out next year. And they're joining the revolution. Qualcomm up by 12.3%. Stay tuned, folks. We're coming back with our man, Steve Rhodes. Always a good conversation. Don't miss it. We'll come right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps right now up by 70 points. We got markets near all-time highs. And right now, folks, we're going to jump over to our man, Steve Rhodes. Folks, you can check out Steve every trading day, 11 a.m. Eastern Time with the Trader's Edge. And right under the newsletter tab, folks, you'll see Mastering Probability, Steve's outstanding daily newsletter. Folks, he puts out morning updates. He puts out afternoon updates. He puts out updates on the weekend. And you get a number of amazing webinars with Steve's subscription service as well. And it comes with a 30-day money-back guarantee, folks. Head on over to the front page and check it out right now as we talk to our man. Steve Rhodes, good afternoon.
Good afternoon, Tommy. How you doing? Great to be with you.
Always good to talk to you, man. How was the weekend?
Good. Yeah, good weekend. Looking forward to tonight's baseball game. You know, the World Series is here. I thought the first two games were great. Tonight's game, I think Scherzer is the pitcher for Toronto, so it's going to be a tough game for the Dodgers, but they are at home. And what's great is we've seen some amazing offense, some great pitching, but still there's been some good scoring games out there. So I'm looking forward to that. How about you?
Yeah, listen, the competition, man. There's nothing like good competition, right? Like totally. Some of these, when they work, they work so hard, right? They're living and dying on everything. They're professional athletes. They just work. So when they get to that level, just amazing to see, man, for sure. I always love it.
It's tough to be a baseball player. I've been friends with some professional baseball players, and it's not as glamorous as it looks. They are on the road a lot.
Not that you don't got to tell me, but I have these conversations, and we're digressing here, but I always, man, if you're making like $500 million, I don't know if I want that lifestyle, because I hear you, right? Especially if you have kids but hey, totally. They're on another level, man. That's what it takes sometimes to get to that level, for sure.
It does. It takes commitment.
So,
like everything
this
else,
market, what are we looking at, Steve?
Well, I thought, I've received several emails and some of it dealing with statements that I make during the show. And the emails I've received are about major market tops out here. So I thought I'd just kind of clarify things for everybody so they can see where we're at. They may not understand my patterns, but as you pointed out, for 30 days, they can understand them effectively, because I teach everything that we talk about here. I teach people exactly what to do. So right now, we're taking a look at the S&P 500 going back to 2007. So, and what I'm really referring to here are major market tops. Major market tops have led to bear markets out there. And in 2007, the S&P 500, for its daily time frame, had a TD9 count top. That's that blue horizontal line. That was the high of the pattern. That remained intact. On a weekly time frame, it formed a Rhodes momentum indicator top, which was the same thing that took place on the monthly time frame. So before there's going to be any kind of major top out there, all three of these charts should have a topping pattern. Let's take a look at last Friday. Last Friday, the S&P 500 negated its Rhodes Momentum Indicator top for its daily time frame. It negated its weekly TD9 count top, and the monthly's got no topping pattern present. There is no major topping signals out here for the S&P 500. We are nowhere near any kind of a major market top. Now, during the last 25 years out here, the S&P has begun its Santa Claus rally on October 9th. That is the red arrow that I've got out here. This is a seasonal time frame chart, again, 25 years. The red vertical line is where we're at right now. So we are in a market that should continue to travel higher through the end of the year. And thus far, October 10th is really the low for every major U.S. cash index out there. Remember, we looked at the seasonal chart. It said basically it comes in around April or October the 9th. Here, I've got the highlighted candles for October 10th. And unless those lows are broken, the bottom should be in for the rest of the year for the markets, for all of these markets out here. Now, that being said, even though we negated a Rhodes Momentum Indicator top and TD9 count for the daily time frame for the S&P 500, today's gap to the upside creates bar number 8 of that TD9 count pattern. Tommy, a TD9 count top, should one form, it's not a guarantee that it will form, the high will come on bars 8, which is where we're at today, 9, or the bar following bar number 9. Now, what that should lead to is at least a 2 to 4 day consecutive decline. If we take a look at coming off of the bottom back in April, that was a major bottom, obviously April the 7th, what we'll see here is almost every single retracement has been either 2, 3, or 4 bars. We had one 5-bar move in the middle of August out there. And so this helps us to understand this. So I'm expecting we're going to see some type of short-term top between today and Wednesday, and then we see a retracement that lasts 2 to 4 days out there before the market resumes itself higher. If we take a look at the NDX 100, the NDX negated its daily TD9 count and Rhodes Momentum Indicator top last Friday, and it negated its weekly TD9 count top. That suggests that we move higher. The monthly time frame I posted in the A to B equals CD pattern to the upside. That has an initial price projection of 28,325. But we are trading along the left-hand side of this C to D leg. This is the exact same angle as the A to B leg out here. This says that we do more than a 1-to-1 A to B equals CD. You were talking about a party hat of 50,000. I think we probably need to change that to 60,000. But let's not go there because I haven't looked at I don't have the Dow charts out here, but I do have the semiconductor charts. And anybody can go back and take a look at their charts and look and find out, has there ever been a top that's formed without the semiconductors also forming that top? We take a look at it right now. The SOX for its daily time frame has got no topping pattern in place whatsoever. The weekly negated its TD9 count top last week. The monthly I show an A to B equals CD pattern. We're pretty close to the initial price projection of 71.99. Again, we're trading on the left-hand side of that C to D leg. That suggests that we do a large move, but no major tops. We're not seeing any signals on any of these key indices that I've shared with everybody. No major top. So let's go back to some major tops. Here's the Nikkei. If we go back to the Nikkei in 1990, on a daily time frame, what we've got is a nice Rhodes Momentum Indicator top. On the weekly time frame, a TD9 count top. On the monthly time frame, a Rhodes Momentum Indicator top. I hope everybody's getting the picture out here. If we're going to see major tops in the markets, in the indice markets, we need to see topping patterns, and they're all the same topping patterns that we talk about here at TFNN. So there's nothing magical. There's nothing new. There's nothing that we force here. The markets will go ahead and communicate to us what its intent is. Now, we can go beyond even just the indices. We can take a look at gold. Gold's last major top I've got as 2011. In 2011, on the daily time frame, we had 2 Rhodes Momentum Indicator tops. On the weekly time frame, a TD9 count top. On the monthly time frame, a TD9 count top. So see, there's going to be a topping pattern. It doesn't have to be indices. It could be anything that we take a look at. An individual stock, a commodity like gold. If we take a look at gold out here, presently, it's got a daily Rhodes Momentum Indicator top, a weekly TD9 count top, but nothing is present for the monthly time frame. So no major top in gold. But we can easily see gold pull back for 2 consecutive months. Why is that? Take a look at this rally up here. We are now in the 10th month of a consecutive rally. The bottom panel here shows us consecutive moves higher, consecutive moves lower. Coming off of this major bottom here in November 2022, all we have had are 3 2-bar moves to the downside. So we don't have to have a major topping pattern. We don't have have to have a topping pattern on the monthly time frame in order to get a 2-month pullback out there. But what gold has to do now, here's gold in all of the Middle Eastern currencies. It has topped on the same day. Here's gold when we take a look at, so we have the peace accord between Hamas and Israel, and we have not taken out that closing high on a weekly basis. Here is the bottom portion where where gold started at the Hamas attack. I believe there's tons of war premium inside here, so we've got to be careful because of the daily and the weekly signals that we've got for gold. And I would say expect a 2-month pullback.
Pretty remarkable charts, man. I appreciate the walkthrough as always. And folks, Steve was talking about those TD9 counts. When you sign up for Mastering Probability, you get that 30-day money-back guarantee. You get a number of webinars. One of them, Mastering the TD Setup 9 Count. You can learn all about it, folks. Check out Steve's outstanding newsletter. Boy, those monthly charts, man, those are something else across the board. Steve, thanks so much as always, man. We look forward to the program tomorrow. Have a great night.
Thanks, Tommy.
Thanks. Folks, check it out. We're coming right back.
It oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&Ps right now just chopping around near those session highs. Got within a point of 6,900 on the S&Ps, and we're right there. We might hit it as I speak. 68.99 NASDAQ 100 up 1.7%. Keep mentioning, big week for those tech earnings. Dow up 262 points. Yeah, 47,657 in the Russell, up by an 8. Always a great conversation with Steve, and just finishing up the conversation with him, going through it. So you do gain access to many webinars, folks. So Mastering Probability, right on the front page of TFNN. Under the newsletter tab, you can sign up, folks. All the subscriptions come with a 30-day money-back guarantee. Okay, I just wanted to walk through it real quick because I rushed through it as the ad was coming. And Steve talks about those TD9 accounts. Okay, they're right here, folks. He did an hour-long webinar. You gain access to that when you sign up for Steve's newsletter, among many others. Okay, overcoming fear and trading and investing, how to spot and avoid the next bear market, the ultimate reversal patterns, the oscillator unchanged line, the ultimate trading signals, candlesticks, Japanese candlesticks. You get all of that when you sign up for Steve's newsletter, folks. So if you want to check that out, check it out. You sign up, you get a 30-day money-back guarantee, and he puts out a great newsletter. And there we are, 6,900 on the S&Ps. And we're only about 70 points away from 26,000 in the NASDAQ. All right, we jump over to Qualcomm. So Qualcomm gives back a decent portion of those gains, but still up by 12%. We take a longer-term look at this chart. They were the poster boy for that 2000 rally, right? Qualcomm. How's that for a nice round number? 100 on the dot. Now, this thing is split adjusted many, many times over in one way or the other. But yes, from 100 back down to 1131. And the good news for Qualcomm investors is if you held that long, you broke even in 2020, you tested that area, and here we are, but we're still well off the highs. Now, I kid and jest, but yeah, you talk about some multiples that they finally come through. Qualcomm, let's go over to the headline. So, taking aim at NVIDIA. Well, NVIDIA's higher today, so NVIDIA's not really worried, okay? They may be taking aim, but they got some ways to go. They're going to have new chips, the AI 200 lineup, okay? Unveiling chips and computers for the AI data center market. The first customer is going to be Saudi Arabia's AI startup, Humane, which plans to deploy 200 megawatts worth of computing systems based on their chips starting next year. Okay, that's Qualcomm CEO. They're trying to break into that market. Qualcomm's up dramatically. Qualcomm is the largest maker of smartphone processors. And guess what? They're saying, yeah, we got to get into the AI business. Early traction for Qualcomm's new AI accelerators. This is Humane, the Saudi AI company. Though it's too soon to call this a serious challenge to NVIDIA's dominance, I'd say that's the understatement of the article. Even modest share gains in that market could translate into billions in incremental revenue. That one I would agree with. You don't have to be a big player in the market to get billions in this market. They're going to be offered in a range of forms, okay? And they're going to be followed by further chips in 2027. AI debut sends those shares higher. Now, 200 megawatts, okay, which is what this deal is for. 200 megawatts of computing power in 2026. For some context here, OpenAI, I believe, has signed 33 gigawatts of deals, or there have been 33 gigawatts of deals done in like the last 4 to 5 weeks. So in that context, not huge, but in the context of Qualcomm adding to their base, yeah, you better believe it. You jump over to the Analyze tab. This company, $201 billion market cap. Not bad for a 10.6% pop in one day. All right, let's talk a little bit of hedging costs. Cost to hedge the S&P 500 rally? Yeah, they're going up a little bit. Now, if you just take a look at the VIX, okay, there is some volatility in this market for a market that just proceeds to never go down. Well, where we were on Friday's open, it's a low VIX. It is. But we've been much lower than 16 on many occasions, okay? You look at where this thing chopped around in the beginning of last year, right? Where we chopped around in 2023. There is some risk in this market, and it is priced in, okay? We're at 1598 right now. All right, let me find that. I'm going to find somewhere near, and I'm just going to put a line on this chart. All right. Whoop, shame on me. The point being, we've been under that level many times over. There is a cost right now to hedge, and it's there in many different avenues. Okay, derivatives market measures the cost of bearish versus bullish bets, has steepened. The skew index, this was in. Extra premium in the short dated. Far downside protection hovers near its highest level in 2 months. Okay? Single stock skew. Saw the opposite dynamic play out, opening a historical divergence, as they put it. But yeah, you got skew. You have the VIX relatively elevated. So we got a big week. And it's a great conversation with Steve, and I agree with a lot of what he's saying. I mean, if you're trying to pick a top right now in this market, folks, pull up the longer-term charts. Okay? Pull up the longer-term charts. There's nothing screaming weakness just yet. Now, I say that, last week's volume doesn't mean to short it, though. We know the market can just drift higher on lighter volume. There is nothing that has rolled over at all in this market right now. And all we did was a 1-to-1. That's all we've done. Pretty remarkable. You do it in that quickly, right? From the lows of October 23rd, 4,800 seems so long ago in this market. That was 6 months ago, and we're approaching 7,000 in the S&Ps. A lot of optimism, though, and a lot of expectations. Meta, up 1.8%. Google, up 3.4%. Both of those on Tuesday. Microsoft, pushing near the highs, up 1.8%. On Wednesday, Apple up 1.8%, and Amazon, laying off 30,000 corporate workers. So they have their warehouses full of automation, but I don't think the automation's in the corporate warehouse. But guess what? It is going to be with AI, right? You're not going to need robots. It's going to be in the computer. We'll steal that one from Zoolander. It's in the computer. The robot workers are in the computers at Amazon. It's kind of double-edged. We'll see how the market rejoices as you cut workforce. Is that a sign of slow growth? Well, we're going to find out on Thursday. Amazon's got some big numbers to fill on AWS after missing the mark last earnings. We're coming right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Markets just continue to drift. S&Ps, we hit 69.04. Look at that acceleration with some buying coming in at about 335. That's what they say, folks. Volume, more people in the store paying more price. Almost 20,000 contracts traded in that 5-minute basis. 69.04 NASDAQ 100. So some buying there as well. You push almost to highs, up 1.7 on the NASDAQ 100. And boy, let's talk a little bit of college football for a moment. Let's talk some sports for a moment. So LSU, Chip Kelly. So he's out. And boy, that was quite a football game. It was a Texas A&M, I believe, versus LSU, and man, they had a rough go at it. This one's remarkable, okay? And when you talk about state schools, and listen, they're making a lot of money, okay, so that's where it comes from. They're also losing a lot of money for coaches that they guarantee money for that end up turning out not to be that great and then get fired. I mean, what a reward. Now, this happens all the time in corporate America as well, but not quite in the same degree where you guarantee the money, you get canned, but pretty much. But you're talking about state schools, and where it varies from the NFL, which is remarkable, is so here's LSU. They're canning Kelly. He's done. $54 million is what he's walking away with. Now, he signed a 10-year, $100 million contract. About 90% of it was guaranteed. He's 4 years into it. Okay? LSU makes about $50 million a year on their football program. So that's an entire year's worth of income that they just lost on that coach. Now, across college football alone, $169 million this year alone of dead money. Okay? And what's tough here is that in the NFL, right, you're growing the business. A lot of NFL teams, you could just break even because that business value is rising so tremendously right now. There's no value to the selling the team or anything like that. They're making or losing money every year to help the college. So if it's helping the college, it makes sense. But boy, these are turning into some pretty fantastical numbers that you're taking out of the state coffers. And what you have to realize is you're guaranteeing the money because you're supposed to be that much better than the next guy. And that is a lot of money, folks, even for a team like LSU. Just to put it in context, that is an entire year's worth of their profits. If LSU football, okay, was a public act, that would be all of their profits gone. They make about $50 million a year from football. Now, they're supporting the athletics program a lot, right, because that's a lot of profit for a school like that. But all of their profits for an entire year gone. And meanwhile, he was only there for 4 years. And it has to be better than the next guy. And these are the next guys. Okay, Penn State, James Franklin. Now, yeah, they want him out to get somebody else in. Very fair. Okay, but that's a lot of money to come out of state schools. Schools in general, not all state. Okay, Florida, Napier, he's gone 21.2. I mean, the whole landscape is changing dramatically. That maybe it's not the coaches. Maybe it's the landscape. Well, you make the case that the coach would have got it done, okay? Yeah, it's a different landscape. They're in charge of the whole deal. That's a lot of money, man. And it's especially a lot when Even for a school like LSU, folks, look it up. That's an entire year's worth of profits. All right. Speaking of money, the NBA, yeah, they think they got a problem. And they're right. And this one's not changing. Now, the story already came out, folks. And you know what the sad thing is that it always has to happen once, it feels like, right? When NBA salaries were taking off, there were so many stories. Was it Antoine Walker, I think, lost like $100 million. Antoine Walker played for the, was it him? I'm not sure. Let's see. Is that the bankruptcy? Who was it? There was the Celtics player. Yeah, Antoine Walker lost $100 million. He had this beautiful house in Milton, Massachusetts, probably many others, but I remember going past it, filed bankruptcy in 2000. It's like you got it. And now, thankfully, it seems like most players that are making that kind of money, they don't go bankrupt. But for some reason, they don't realize that you shouldn't be gambling. Hopefully, this is a wake up to the entire league. But the NBA, yeah, dire risks of gambling. You better believe it, because it's a joke right now. And it's a joke in that it's just happening everywhere. Now, the story comes out that you had Antonio Gates. Okay, Antonio Gates was, let's see, hosting and participating in the alleged fixed poker games. And that's from Pablo Torres, who's breaking a lot of stuff, man. Now, these are all allegations, okay? But it's pretty remarkable that gambling is everywhere, and the NBA does have a problem. And I don't know how they solve it. And and then you add into the mix that you have Chauncey Billups showing up in a Clutch Sports sweatshirt, which Clutch Sports is Rich Paul, ties to LeBron, and so the whole mix is in for the NBA. It's all in. Yeah, they got a problem, man. And unfortunately, hey, it speaks for itself. It's a problem. What I was going to say was, unfortunately, anytime there's that level of money involved where people can make millions, it seems like no matter how much money people have, the temptation is always there. And remember that in your own life, folks. Temptation, the amount of times you see people who seem like they're well off, right? But they just think there's some temptation. And this is just what happened. It's not making light of it. It's not making excuses for them, okay? And not that it could happen to any of us, but there's different levels of everything that goes on. And the more you see this happen to people you don't think, I mean, the reason why these poker games, okay, were able to be fixed was because the players going there basically couldn't fathom that NBA players that probably collectively at the table were worth close to $500 million sometimes, would go through the trouble of fixing a game to the level that they did, which would be the only plausible explanation for how the cheating was occurring. And meanwhile, that's what was still going on, right? They were sitting at a player of tables that were worth hundreds of millions of dollars, and all of those players had went through the actual act of everything alleged just to steal their money. And even professional gamblers, poker players, struggle to understand how that plausible reason could take place. And guess what? It was the truth. Now, that stuff happens in the stock market more so than at the poker tables, I'd say, folks. Okay, and we're all speculating. But be aware of that stuff out there. Be aware it's always happening. And always realize whenever there's money to be made, it always comes out somehow that the temptation can be there. And yeah, this one's not going away. It's going to be, hey, Antonio Gates, right? Who's the next one? Is LeBron going to get brought in? It seems like that would be impossible. Okay. Is Rich Paul, who's in charge of that sports agency, is he going to be brought in? Well, it seems like that's a far reach. But to say that you had Chauncey Billups, a head coach in the NBA, to say you had a player in the NBA making $26 million a year fixing games for hundreds of thousands, they got a problem, and they got to get it under control. Gambling, folks, listen, I'll be the first one to tell you, man, I love poker. It should be a game that you can only risk what you can lose, because it is gambling. Similar in the market when you're talking about in trading. Investing is one thing. Trading, gambling, not that far off from the same thing. Risk versus reward. Markets, through the roof. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And yeah, we're not stopping. S&P 6910 up 83 points, 1.25%. We might get there in the NASDAQ 100. We're only 23 points. NASDAQ 100 up by 1.83%. We're up 467 points. 25,981 is the high on the futures. Volume, a little bit light compared to where we were on Friday, but we're going to get some volume on the close. Dow catches a bid towards the end. We're up by 0.7%, up 317 points, and the Russell up by 10. Bitcoin, 115,000. We were a little bit higher for Bitcoin. We've backed off those highs. And you jump over to yields. The 10-year sitting at 4% right now. The dollar sitting at 98.81, and we check in on gold, 4,002. But yeah, that's quite an acceleration. You're picking up steam, right? More volume than we had the last couple of days. You're trading lower, and now we're right into this bar from October 9th. And we're right at that round number. This is an important number because we're at the 382. Okay? We're testing the volume we had from October 9th, and you're at a nice round number of 4,000. It's been a heck of a run, folks. Sent out a video update for the gold report today. I'll have a full update with the equities tomorrow. And, you know, if you still have equity positions, just get a line in the sand, folks. get a line in the sand, get a stop in there. The run's been remarkable, and the pullback is continuing. Some of the strongest equities out there. AEM off 5.3% right now. New Gold off by 3%. You jump over to McEwen's been a big one, off by 3.1% right now from McEwen shares, but not this market. You jump around to the big ones. Meta up by 1.8. NVIDIA, yeah, not worried at all about Qualcomm making new chips for the Saudis. Not even close. NVIDIA up by 2.7, up another $5 to 191. Oracle slightly lower, off by 0.8%. Maybe. All right. Look at this. It's gone. We're going to finish at the tick high. S&P's up by 1.25%. Folks, thanks so much for tuning in, spending your afternoon right here with me. Have a great night. Have a safe night. Enjoy it, folks. Enjoy that evening, and we'll see you back here tomorrow morning with Morning Market Kickoff at 9 o'clock. Have a great one.